Hi, we're back with an early global view on Thursday, October 15th, 2015. It's currently 7:45 a.m. We are coming to you a bit later than usual because we wanted to see the US CPI and Empire Manufacturing before we went ahead with this because there's been quite an interesting bump up in the equities today, and we wanted to see those figures and how they reacted to the data. And of course, we have to ask, what did all this mean to the markets? And the bottom line is that in spite of the continued weak data today, the US S&P 500 index is up at 1994, up 10 on the day. Now, this is very important from the standpoint of the bad news is good news psychology. Yesterday, especially with those weak U.S. retail sales, the bears were able to pressure the market back below the key support at 1990 to 88. Washed out below it early, but then came back. But later in the day, they pressured it. To gap well back above it today kind of reinstates it as support. So we'll see what happens if we get back down into the 90 to 88 area today. And most importantly, once we actually open, we will also have to see if the hourly MACD, which really could not quite, when the market didn't follow through on the upside yesterday, could not quite claw its way back above this lower runaway band. We're going to have to see if that can do so if the market starts holding up long enough. If that's the case, it's probably diffused the weakness. If it can stay above 90 to 88, then probably no need to test this lower channel support across the day. That's between 1977, but as we would get out late today and early tomorrow, that's up toward 1988. So very important trend support here. Next lower overall support, 1970 to 68. And the resistance will be back up around the previous trading we will see on the intermediate term charts up at 2011, trading high from back on September 17th, December contract. 2015, that's a major weekly chart down break that it just barely tested going back to Wednesday and then could not penetrate it. So that's, of course, something to keep in mind. And, pardon me, going back to Tuesday. And, of course, 2020, that was the trading high of the September contract right as it was about to expire on the high trade before the big sell-off after that September 17th FOMC meeting. And that pretty much does it for the short-term view of the S&P 500.